On today's Hot Sheet, I'm discussing the Zillow Housing Market Report for March, the Builder Confidence Index, and March housing starts. Today is Tuesday, April 16th, 2024. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Welcome into the Hot Sheet. Let me know in the live chat which market you're tuning in live from today. This is BAM Fest week. We are now one day away from what I would say the biggest virtual event in real estate since, of course, the BAM Pro Bowl in February. This is BAM Fest week. Tomorrow, it all kicks off. Tomorrow at noon Eastern. By the way, if you didn't know, this was a free event. You can be registered to win 2 tickets to BAM Camp DC. We're giving away a bunch of Jordan Cohen's Agent Edge book, which is fantastic. I've read it 3 times. One because Jordan forced me to read it. The other 2 because I enjoyed it so much. We're also giving away some other stuff, probably some merch and that kind of stuff. But we've got Jordan Cohen, who wrote the book Agent's Edge. Absolutely crushes listing presentations. Sylvester Stallone's a client, many other very famous names. Jared James and I are going to be doing a fireside about how to prepare for everything that's changing. Chelsea Pites on what is working now for brand, how to convert. She's talking about Instagram as well. Chris Benjamin is going to be on here. Mindset for creativity. He certainly has a creative mind. Lisa Chinati, best strategies to handle leads. Myself, Eric, the broke agent, as well as Luca from Actually Agents are going to be moderating. If you did not attend BAM Pro Bowl, you missed a whole bunch of entertainment weaved into the education. This will be not unlike that. We have a DJ. We have some really cool, I'll just say some really cool music happening between some of the events. So BAM Fest week, that's tomorrow. It's a free virtual event. You also, by registering, get a chance to win a couple tickets to BAM Camp DC. So there's going to be a link down below for that. Of course, BAM Fest tomorrow is not expensive at all because it's free. It's just an investment in your time. But Zillow just came out with a report claiming the expensive get more expensive. Home value growth tops the highest price markets here in the March 2024 March report. Monthly appreciation spikes in expensive West Coast metros with meager options. It stays cooler in areas where inventory has returned. We've seen that. We went over inventory in quite some detail yesterday. If you missed yesterday's hot sheet, go back and listen, whether it's Spotify or Apple for you, or certainly here on the YouTube channel. Hit subscribe if it is YouTube for you. We went through inventory. We saw where it's exploding, particularly in the Sun Belt, Southeast, in comparison to last year, year over year. Florida, for example, was the leader of the pack at 57% year over year. It's no surprise that home price appreciation in Florida has slowed. I did not say drop off a cliff. I did not say, it's going down double digits or anything like that, because that's not the case. But it has cooled. It has slowed. It is more stagnant than it's been at any point, obviously, in the last 3, 4, 5+ years even. In areas where you see inventory still remaining tight, that's where you're seeing this home price appreciation, and that's validated here in this Zillow report. I do expect those markets to experience an uptick in inventory over the next 12 months. Those are the leading indicators that we're seeing right now. Certainly, if the economy continues down the path that we're on right now, I would expect it to be even sooner for that inventory to pick up. And as inventory picks up, you should see prices cool in those markets, along with the fact that with the cost of financing, buyer demand is subdued. It's less than even at this point last year. Okay. Let's look at some of the metros with the strongest monthly gains, according to this Zillow report. And oh, by the way, these are lagging numbers. So we're sitting here in the middle of April. Any of these gains were reflected from under contracts or escrows in January, most likely. So this is a lagging indicator. And remember, January, we were coming out of a December when home shoppers were near 6% 30-year fixed interest rates. It'll be interesting to see as we get to the end of the spring and we start to get into the summer, what some of these numbers look like then. But the metros now looking backwards with the strongest monthly gains: San Jose, 3.3%, San Francisco, Seattle, San Diego, and Los Angeles, all on the West Coast. Metros with the slowest monthly growth rates: New Orleans, San Antonio, Tampa, Orlando, and Jacksonville. No surprise that the metros with the slowest monthly growth rates are all metros where we saw the biggest gains in inventory on yesterday's show. Shocker. More inventory without demand matching it means that price growth is going to be smaller than those markets where you see home price or see inventory less. Home values increased year over year in 47 of the 50 largest metros. Hartford at 12.7%. We looked at Connecticut on the map yesterday. It's one of the only states that has negative year over year inventory. It was Hartford, New York, and Jersey, either flat or negative. So no surprise that it has the biggest jump for metros. San Diego at 11.8%, San Jose 11.2%, Boston the last 12 months has experienced very low inventory, 9.5%, and then LA 9.3%. Three major metros experience year over year declines. That'd be New Orleans, Austin, San Antonio. Who would have thought it'd be those three? It's the areas with the inventory increases greater than most other parts of the country. Inventory will subdue home prices. In these areas, New Orleans, Austin, and San Antonio, they actually went down. Not saying that'll be the case everywhere. There are places in the Northeast, for example, where inventory is still 60, 70, 80% below pre-pandemic levels. So it's going to take a lot for prices to come down in those areas. But when you look at an Austin or a San Antonio, inventory is basically back, or even in some cases above where it was pre-pandemic levels. That's where you see a little bit more of not only a cooling off, but even a slight decline in home prices. New Orleans, obviously an outlier in the country there, with 7.6%. Metros with the most significant increases in seller activity compared to 1 year ago. San Jose up 18.4%. These are straight out of your BAMX show notes, hot sheet show notes that get uploaded to BAMX each and every single day. So you can check these out for what I'm going to skip over in more detail for your marketing and newsletters by just jumping into BAMX and checking that out. Dallas, Fort Worth, 16.6%. Tampa's 15.4%. Again, that was most significant increases in seller activity. Okay, those are markets outside of San Jose, Tampa, Dallas, and Tampa, where inventory is particularly higher than other places of the country. San Jose sellers probably cashing in on those price gains. Metros with the fewest new listings compared to a year ago: Boston, Pittsburgh, and Washington, D.C., all in that either northeastern or eastern corridor area. Pittsburgh, obviously, maybe leaning towards Midwest, depending on how you look at that. Inventory increase year over year in 36 of the 50 largest U.S. metros, with the highest growth recorded in Tampa, Dallas, Orlando. This is according to Zillow. Obviously, we looked at some numbers yesterday as well. Inventory fell the most year over year in New York City, Las Vegas, and Buffalo. Those Buffalo Bills Mafia buying up all of those properties. Time on market trends, according to Zillow, listings sold swiftly in March. Good news for sellers, with a median time on market of just 13 days, slightly slower than in recent years, but significantly faster than the pre-pandemic norm of 21 days. I think as we go further along this year, geopolitical uncertainty, as well as getting closer to that election, I think we start to actually lean more towards 21 days, certainly in the inventory markets that are increasing. There are some markets like the one I'm sitting in right now, 21 days, sellers are blowing right past that on the West Coast, the Gulf Coast of Florida. 21 days is nothing on the market right now. Sellers are like, whoa, I'm on the market. I'm like, this is, and agents are like, yeah, this is back to being able to have a conversation that is meaningful with sellers each and every single week. Some agents have never been in that position in their entire career. If you're just coming into the business 3 years ago, You've never been in a position where it's like, I've got to talk to my seller for 5, 6, 7 weeks on the market and add value throughout that entire experience. Yes, you do. Buckle up, Buttercup. That's the deal now for listing agents in these markets where inventory is increasing. It's a phenomenal skill to have, to be able to talk to your seller every single week, educating them on the market and maybe what tweaks or positioning we can have. How are we uncovering other buyers that haven't come through yet? How are we communicating with the buyers that have come through? What's our open house strategy? These are all conversations that are very fruitful and valuable for sellers who are on the market. Projected decline in time on market median days depending are expected to continue declining in April, remain low in May, indicating ongoing rapid sales activity. Again, these are lagging numbers from what has been under contract in the past. Trends in newly pending sales. Newly pending listings surged by 17.7% according to Zillow in March compared with the prior month, although they only increased marginally by 0.1% from previous year, suggesting a steady but not dramatic year-over-year growth in sales activity. Okay. There you go on the Zillow general report. There's a whole bunch of stuff. If you're dealing with some rents, there's a whole big rental component here in the show notes that you could dig into further on BAMX. It's all available there for you. Builder confidence index came out. Builders obviously are, in a sweet spot in a lot of these markets where inventory has been low, but they've also been building, the national home builders, where inventory is going up. So that clock is ticking for them to clear out some of that market. But how do they feel about the market? How do they feel about the market overall? Builder sentiment was flat in April as mortgage rates remain close to 7%. Now, obviously, closer to 7.5% the last couple of days. Builder confidence in the market for newly built single family homes was 51 in April. That's unchanged from March. Anything below 50 is obviously not good. There's a break-even point of 50, so they're at break-even. They feel lukewarm about the market. I would anticipate as we get further into the year, they drop back down below 50 because as inventory grows, that's builders' competition. Okay, builders compete with existing home sales. The NAHB chief economist Robert Dietz, April's flat reading suggests potential for demand growth is there, but buyers are hesitating until they can better gauge where interest rates are heading. With the markets now adjusting to rates being somewhat higher due to recent inflation readings, we still anticipate the Federal Reserve will announce future rate cuts later this year. Oh, I don't know about that, Mr. Dietz. I wouldn't be counting and banking on these cuts coming anytime soon. The Fed hasn't shown any indication that until they have a clear pathway of 2% that they're going to start those cuts. I know they teased it early in the year. I think that was more pressure from DC than it was a reality. They may have to back off of that now, especially with the last couple of weeks. So not to say the Fed is influenced by whoever's in office. I would never make that claim that Jerome Powell could be influenced politically, because he has told us many a times that that is not the case. He will have no political influence. All right. So builders are feeling lukewarm about the market. I expect their sentiment to go down in the future as inventory goes up. That's truly what they're competing with, existing home sales. While rates, continue to be high, their cost of their homes is high. We looked at that the other day here on the hot sheet. And also, they're building in a lot of these markets where we see inventory going up. Speaking of new construction, building permits came in for March at 1.458 million. Housing starts at 1.321 million. And housing completions came in at 1.469 million. Those are your updates on that. How did that perform month over month and year over year? Privately owned housing units authorized by building permits in March, seasonally adjusted rate of the 1.458 million. That was a 4.3% decrease from the revised rate of February rate of 1.523. It's still 1.5% higher than last year's mark. Single family authorizations were down 5.7%. Multifamily authorizations were at a rate of 433,000. Multifamily, you've already seen this drop, and you're going to see single family drop. What do you mean? We need more inventory. As existing home sales inventory goes up, you will see single family starts and permits from builders drop. They're not going to get into a situation where they overbuild. They learned their lesson from the great financial crisis. They're not going to put themselves in that position. They're going to protect that profit margin, which is enormous, that we saw yesterday, that we took a look at yesterday. There's a 14.7% decrease from the revised February rate of privately owned housing starts. Okay. So not just permits, but starts are down 14.7%. They're not going to overbuild. And as we see this inventory increase, which is going to happen at an even faster rate over the next 12 months than we've seen over the last 12 months, they're going to slow down on the building. Well, we're going to be in a big inventory problem then in 3, 4, 5 years. Yeah, we're probably just basically always going to be in an inventory problem when we think about it from an affordable standpoint. Plenty of inventory for people that want to spend $600,000 or more. They find a home very easily in that price range, no problemo. Okay, but when we're talking about inventory problem, let's really call it what it is. It's the affordable issue that we have. Okay, the only other issue that we have today, because we really have no issues with BAMFest being tomorrow, the biggest virtual event in real estate since the BAM Pro Bowl, absolutely free. Of course, make sure you sign up for tomorrow, kicking off at noon Eastern, 3-hour event, action packed. I did mention a problem. The only problem we have is this 10-year continues to go up. It obviously shot up yesterday off of the retail sales, was shooting up before that from the CPI. Then we obviously had, worries about what's going on in the Middle East. All of these things combined are kind of driving the 10-year right now, 4.684. I mean, we're getting close to 4.7. When we hit this number last year, 5, we were at an 8% 30-year fix. The spreads are better. So I'm not saying if we hit 5, we'd be at 8% on the 30-year fix. The spreads are better right now than they were this time in Q4 last year. But the Fed really didn't like this. They said this is too much. This is too restrictive. Remember how much the market slowed down when we were at 8%. Probably going to start feeling a little bit of that now here north of after today will be north of 7.5. My prediction. I don't know that for a fact, but just my prediction on the 30-year fix will probably feel a little bit of that. 7.44 yesterday, up from 7.30 to end the week on the 30-year fix. But the Fed was like, this is too restrictive. So, would that get them to make a move? I don't know that it would if inflation reads keep coming in hot, but we shall see. All right, BAMFest week tomorrow noon. BAMFest is a absolute killer lineup with Jordan Cohen, Jared James, Chelsea Pites, Chris Benjamin, Lisa Chinati, myself, the broke agent, and actually agents are going to be hosting. I'll be doing fireside style chat with Jared James to kick off at noon Eastern. Make sure you sign up. Totally free. 2 tickets are going to be given away to BAM Camp DC. A whole bunch of books. Jordan Cohen's books were given away. Should be a lot of fun, and hope to see you guys there. I will obviously see you in the comment. No real word today as we prep for BAMFest. So my apologies there. I will see you back here tomorrow morning and then at BAMFest tomorrow at noon. Until then, toodaloo and have a great day.